Well, specifically for, say, due diligence, we have a phenomenal property managers that we work with, but we still help confirm what they do. They look at every single lease, they walk every single property, they keep a track of all that, but we help keep track of them as well to make sure, okay, did you do all these things? And they always do, but we still have the responsibility to our investors that we did check every single lease agreement in the 227 unit apartment. We did walk every property. We did look at all the contracts for all the third party providers to make sure, are those terms and conditions favorable?
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Matt Hansen is a retired corporate executive that transitioned to full-time real estate investor. His portfolio includes over 2,000 units of multifamily apartments. Matt, welcome to the show.
Thanks so much for having me, Sam. Glad to be here.
Absolutely. The pleasure is mine. Matt, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Well, I started, as you know, a retired corporate executive, which prepared me really well because buying multifamily is basically you're buying a business. So that was my background. And then how I got there, I joined a high price mastermind out of Dallas. I live in Michigan. And that's how I started to really passively invest initially for a couple of years. Then I started running deals as a general partner. And now we're just having fun. I partner with all my friends. We buy properties in Texas, Florida, Arizona, Georgia a little bit, some of the Carolinas. And that's kind of where we're at. We're just looking at growing our portfolio and helping as many people as possible get their money out of Wall Street and put it into Main Street in apartments.
I love it. Absolutely love it. That's it. That's certainly a topic that is near and dear to my heart, especially, helping people go from crud, what do I do with my money, to then I had somebody recently call me and they're like, hey, wait, so is this a return on my investment or a return of it? I'm like, that's a return on it. And they're like, wow. And these just keep coming. I'm like, yeah, it's fun, isn't it? So yes. Good for you for helping people out with that. That's awesome. What was your corporate career?
I was a global supply chain director. So it was a Fortune 100 company. So we had shipped products to 86 countries around the world. And my job was to make sure these hazardous materials got in planes, trains, automobiles, barges, you name it, we shipped it. And I was a global director. So I had teams stationed all in every area of the world that were responsible for that. So pretty high stress stuff, a lot of cost benefit analysis, risk analysis. That was my job. So that's why I transitioned to multifamily. Running business was so simple for me and fun.
That's what I was going to ask. Does this seem like is this easy for you?
So much easier. The moving parts are pretty minimal here compared to moving chemicals, around the world in containers and vessels and all sorts of stuff. So yeah, this is fun stuff. It's really fun to me because the stuff I had to deal with before. I retired just kind of in the middle of COVID, so I avoided a lot of that supply chain stuff. So it worked out pretty well because now it's a nightmare to be in supply chain.
I can only imagine. That's fantastic. What was the impetus to get involved in commercial real estate, specifically multifamily?
It was really in 2008-9, I lost about $300,000 in the stock market. And that's when and my wife and I have always done single family homes flipping here and there just as a side hustle. But that's when the light bulb went on. Hold it. I have like 100% of my investments in Wall Street. No control over it. Those guys are running their own show out there. And I worked for a large corporation, so I kind of know how things operate. So that's when I kind of light went on. We did a little bit more of single family flipping. And then about 6-7 years ago, I got into large multifamily. And it's no work at all. It's just running a business. And that's stuff I was trained to do. So that's kind of what it was, is to get out of Wall Street, protect and now my portfolio, 60% of it's in real estate, right. 20% still in the stock market stuff I can't get out. And the other 20% is venture capital stuff. So it was really, Wall Street pushed me out and said, hey, you can do something else.
Right. Yeah. No, there's nothing like the pain of a large loss that you go, oh, okay, I need to change my approach here. Yes. You came in as a limited partner. That was kind of your first experience. Would you recommend that to anybody else looking to get in, or is there another path you would recommend people take?
Wrongly recommend coming as a limited partner. I did a lot of limited partner. I had some 401k money that I was able to eventually roll over into a self-directed IRA. But yeah, because that way you see what's really going on without having any skin in the game. You're a limited partner. You're not liable for anything if things go sideways, but you learn, how does a good general partner manage? How do they treat you? And I learned just as much what not to do as what to do. and I've invested in probably a dozen deals or so. So that was a great learning. So before you go off and be a general partner, you need to know what it's like to be sitting in the limited partner's position. And are you feeding them information? Are you keeping them updated on what's going on with the property? Are you letting them know what's going on in the market? Those are the types of things that I really value. And I make sure all my investors, full transparency. There's no hidden stuff. I tell you what's going on at all times. I think that's pretty critical.
Absolutely. Yeah. And it sounds like maybe that was one of the things that you aspired to do well after being involved with limited partner. It sounded like maybe communication was one of those things that you wish you had more of.
Exactly. Yes.
That's a great piece of advice. Was there anything else that you took away from the limited partnership experience that you said either I want to repeat or I want to do better?
Yeah, I think it was mostly the communication really is the number one thing.
Mm-hmm.
The markets, do your own due diligence. I had one deal that went sideways that I passively invested in. And it's because I didn't vet all the partners, and I should have. I just vetted the primary one I was investing with, but the other two ended up running the show and he stepped away. Again, that was a lesson learned. Vet everybody, all the partners. Who are the asset managers? Who's going to run that asset? And who's their backup, most importantly? And that's what I didn't check. That was one of my biggest lessons was vet all the partners that you're investing with.
What do you say to that? Who is their backup? Like how do you guys handle, because I asked a sponsor this a couple of years ago on a deal I was investing. I said, so what happens if the two of you get run over by a bus? Like, then who's running the show? And they didn't really have a good answer, which was fine. I mean, it's a good buddy of mine. I invested anyway in the deal, but we made a lot of money on it. It was great. But so it's a question that still lingered that was like, well, I wonder how that works out. What do you guys do today?
So we do have two people that are the primaries at all times. They're on the calls with the property manager once a week. So there's two people that are already fully in the loop and knows what's going on. And then there's usually 4 or 5 people that are general partners, and all of us could step up and run it. Asset manage, no problem. We all have, one of my partners is 10,000 units. I'm a little orphan compared to him, or a little, small guy compared to him.
Right.
There's the bench strength is so strong that if the two primaries walk away, there's probably 3 more that are just as good as them that can step up to run the show. And that's why I say vet all the primary partners, not just 1 and 2. That's great, but the third, we've got 3rd and 4th there in our deals.
Right.
Good question.
No, I think that's a great piece of advice, and probably something, as I passively invest with other operators around the country, I don't spend enough time probably going beyond the primaries. Like, okay, this is who I know I'm working with, but getting into the bench and figuring out who the entire roster is probably an important part of that. You went from the LP side of things to where you then said, hey, we're going to launch into the general partnership side. What was the driver there for you? Were you bored? You were in retirement? Why become a general partner even?
I was moonlighting, so I was a side hustle. I was still an executive, but I got to the level where I wasn't really working that hard. I didn't really have a full-time job. I was there for what I knew, not what I did. So I would show up for meetings and things like that, but I still had a lot of extra time in my day. And then it's when I thought, well, I'm doing this limited partner thing. I got time. I could start doing general partner. So what I did though, is I would run the deal from LOI, letter of intent, to close. I didn't do any of the fancy stuff outside. I didn't do any outside marketing. I created the marketing materials, but I didn't market it as myself, because there was I didn't want to get in trouble with my corporate gig. So for about 4 years, I did that behind the scenes stuff. And then when I retired about 2 years ago, then I could openly say, hey, this is what I'm doing, which was a real created a deficit, because I've been doing this for 6 years, multifamily, but nobody knew it until recently. So I had to kind of start developing my track record with these people that don't know me, even though I've been doing it for 6 years and done some great deals that went full cycle. So that was a bit of a challenge, keeping it secret, if you will. And then eventually, when I retired, I could just talk openly. So it was creating a runway. So when I did retire, I had another business. I'm like you, Sam. I know, I can tell already, you're the person that's going to work till you're 80. Just that's the type of person you are. You're not going to sit and do nothing. You got to do something. And this is fun.
Right. That's absolutely right. No, I think that's great. So you went into the general partnership role. What were some of the things, or what's been some of the methods maybe that you have used to take down deals? I guess I'm really curious, when someone steps into this with a brand new perspective of, like, maybe you weren't brand new because you were a limited partner and you're a GP behind the scenes, but now you're coming on as the guy in charge of the show. So what did you do maybe differently than other people were doing, or what did you repeat that you would say, hey, this is this is how the method we're going to use to acquire, own, and operate assets.
It really came from my corporate experience. So I'm a green belt, Six Sigma trained. So I have this methodology of, measure, analyze, improve, and control. And so you just implemented this. So you're buying an apartment complex. It's just a project. And I used to work on $1 billion projects where we're putting in a new supply chain plant. We have to figure out what the supply chain network looks like. Same thing for this. We're buying an apartment. You need to make sure your attorney's on board, your insurance company, your tax person, your property manager. You assign those tasks with deadlines and specific action plans. So there's a formula. So the group that I belonged to had a pretty good formula that we just kind of followed, but I made sure we had the operating discipline to follow that. You check every single box. You don't leave one out because you're buying a $40 million apartment complex. You've got to do your due diligence, and you check the due diligence of other people as well. So I think my corporate experience was priceless for this because it was easy to step in and say, I've run literally $1 billion project. This is a $40 million project. And it's much simpler.
Right.
So that's really what it is. It's processes, systems, and a control plan, which most people aren't familiar with. You're going to do it, follow up, and measure to make sure it's getting done.
Can you define that maybe more clearly when you say a control plan?
Well, specifically for, say, due diligence, we have a phenomenal property managers that we work with, but we still help confirm what they do. They look at every single lease. They walk every single property. They keep a track of all that, but we help keep track of them as well to make sure, okay, did you do all these things? And they always do, but we still have the responsibility to our investors that we did check every single lease agreement in the 227 unit apartment. We did walk every property. We did look at all the contracts for all the third party providers to make sure, are those terms and conditions favorable? Was there a kickback that they'd gotten earlier that applied to this year? Did we get that money? There's all these little things that if you don't have a process in place to double check it and to make sure it happens, it might not. And it could be catastrophic.
For sure. Go ahead. What did you do? Did you build those processes, or when you came on board, were there other team members that had kind of already, because that takes time. That takes time and experience to build those. How did you perfect those?
Our team, our mastermind had a 42 line item checklist that we worked from. And it's really, most people just kind of gloss over. The whole thing was, did you implement it? And that's what my job was to make sure. So a lot of it was kind of done for me. Yeah, I would tweak some things here and there, but 90% it was already ready for me. And that's why I paid all this money to be part of this group, this elite group. And they really did a good job. And I'll say it, it's Think Multifamily out of Dallas, Mark and Camille Kinney. I'm going to go ahead and say they're phenomenal. It's a small group of people. Like there's over 100. It's not one of those big groups. There's thousands and thousands. I personally know every person in this group, and Mark and Camille have our backs with expertise. I've been doing it for 6 years, but every single deal, something new comes up that you haven't seen before. Well, Mark's been doing this for 20 years. He's seen everything. He's been through every cycle. So I've got that back. He's always got your back. And that's a big advantage of being part of a group like that. I'm not off on my own doing things.
Absolutely. How are you guys finding value right now? I mean, multifamily's been on a tear for a while. What are you guys doing that separates you from all the rest of the people out there buying multifamily assets?
Well, we do a lot of deals. I think in the last few years, we've done 103 deals, and brokers love us. Sellers love us. With the deal we're doing in Florida right now, we bought from the same seller earlier this year. And I don't think we're actually the highest offer, but they knew certainty of close. We're great to work with. We're going to do what we say we're going to do. We're not going to retrade at the end and all that stuff. So our track record at my partners in my group is so strong. There's a little town called Decatur, Georgia, outside of Atlanta. We've got I think 8 or 10 deals there now because the brokers just love us. So they feed you deals if you prove you can close and you're easy to work with. So that's really, and again, it's an unfair business. As you know, it's a relationship business. And our relationships are so strong because we perform so well. We get deals that other people don't. It's just that simple.
Right. That is, yeah, that's absolutely simple. Talk to me about interest rate risks, what you guys are doing to hedge that. How are you funding? How are you funding and arranging the capital stack maybe differently now than what you were even 12, 18 months ago? Yeah.
So it's a leading question. Now you've got to have your rate locks and all your other cap locks and all those things. So things that were costing us 2 years ago $40,000 to say, okay, when we have a bridge loan in 3 years, we're going to refinance it. It's going to control the rate. It's not going to go up 3%. It controls that, so you kind of prepay it. Well,
right.
A few years ago, we have a deal in Memphis that I think we paid $40,000 for our rate lock, a rate cap, and now it's like hundreds of thousands of dollars because the future is so uncertain.
Right.
But we factor that into our underwriting. Interest rates have went up now, a couple percent. But it's surprisingly, we rerun the numbers, and it's like a fraction of a percent return impact to our investors typically. So we just really, it's the numbers have changed a lot. We're not saying, when I did do deals 2 years ago, it was 10 to 14% cash on cash returns. Now we're saying 7 or 8. So we have had to adjust that, and it's tough for investors to take that, but it's the market. We're not going to say you can do 10% because you can't anymore.
Right.
It's you've got to say the range has gone down because the market has changed. So that's what we've done. We've adjusted our expectations of the investors along with the market, and then just do everything possible to control that number and try to predict what's going to happen in the future.
Absolutely. And that's something I was actually working on a spreadsheet this morning, and it was kind of a little bit of a head scratcher. It's like, gosh, as we watch inflation skyrocket, as we watch interest rates go up, the unfortunate reality is that returns go down. It's like, yes. Oh man, like you'd kind of think you'd want them to like track in parallel in some weird way to where it's like, oh, okay, well, I know that everything costs more, and I know that but look, hey, we're all making more money along the way, so it evens out. That's just simply not the case. And we were even working on arranging a debt deal, and it was like, okay, well, gosh, like. Anyway, I won't bore you with the deal specifics, but I guess I'm just agreeing with your point there. It's like, oh, this is, we just have to reset investor expectations. How has your business for you personally changed, and why in the last 24 months?
I've really focused on capital raising and putting earnest money into deals, and because it's so much work to run a deal now. Like 2 years ago, pre-COVID, it was so simple. It seemed like it. Because now you have insurance are going up crazy, and then the interest rates with the lending brokers and all of those things. So I've actually chose to say, okay, my partners are stronger than me in that, and they really enjoy it. And I've known them for years and years, so I know I can trust them, the process in place, that I've kind of taken a back seat to it because I'm retired. I don't want to work that hard.
Right.
So that's how I pivot, Sam, is like I backed off a little bit, then I'm allowing the people that are much younger than me, in some cases, that want to really, really work that hard. And then I, of course, work with them on, counseling to make sure things done right. But that's kind of how I pivoted, because it has making it more challenging to find deals. It really has been.
What has that process been like for you? I know you said that you had to kind of keep what you were doing under wraps until once you retire, but then once you got out, you're like, hey, you can tell everybody what you're doing, which is critical to raising capital, is being able to tell other people what you're doing. What's that process been like, though, as you've kind of stepped away from the deal, what did you call it, LOI to close, and now it's, hey, I'm going to focus on capital raising. Talk to me about that a little bit, and just the fundraising, capital raising side of your business.
It's really about education. I remember when I was new to investing that some of the general partners I had invested with didn't really disclose everything to me. They didn't, I read through the PPM, 120 pages and all that stuff, but they didn't tell me like the distributions aren't going to start for 6 months to a year because we have to renovate the units. I had my first 3 deals. Nobody told me that. It was like, so I make sure that I'm overly transparent with my investors or potential investors, because I know what that was like sitting in that position. And I walk them through moving their money from an IRA to a self-directed IRA. I get on the phone with the financial institutions with them and help them do those things, because I know how challenging it is. So I think that's the limited partner in me. It was like, okay, I handhold everybody with white glove treatment through the whole process because I was that guy 6-7 years ago. So I think that's really what the big advantage is, that I know all that stuff and that I know what it's like to be that individual. So it's really education. And just recognize it may take 2 years before somebody is willing to take the leap to invest. Mm-hmm. And sometimes it's 2 days, right. It just depends, and everybody's different. And I'm just accepting of that because I want them to be comfortable with their investment.
That's exactly it. Yeah. And I think the funny thing is the more comfortable I think I've become with just letting people do what's in their own time, the more money comes in easier. It's like, you know what? Hey, if this is for you, get in. If it's not, okay, don't. It doesn't bother me one way or another. This is the opportunity, and the bus is leaving. So if you want to go for the ride, I'm driving, so let's go. And if you don't get in, no problem. And I think that what's been funny is just watching people pile in. It's like, oh yeah, and I went in on that. Like, okay, just the more you relax, the easier this becomes.
Right.
On the and you know, you want people to do what's best for them. I mean, that's the whole point of bringing limited partners on, is to do great things for them along the way. So that's fantastic. Tell me this, Matt, when you think about risk in the marketplace, when you think about what you guys are buying, when you think about things that could go sideways, is there anything that comes to mind? And if so, how are you guys mitigating that?
We're still buying the class B, C plus properties. And you know the saying that, well, when the economy's bad, the people in the A's move down to the B's. When the economy's good, the people in the C's move up to the B's. So we still stay in that medium value, light value add in the class B stuff. But I know people that are buying class A properties, but your returns are not going to be the same.
Right.
And we've got the model in place. We've got large construction companies that will travel anywhere around the United States for us to do the exteriors for us. So they come and boom, do that quickly.
Wow.
We know, like, and trust. And we know the markets. We only play in the markets with high population growth and high employment growth. So Florida, Texas, Arizona. It's still almost not to say dummy proof. You have to have the systems in place and the connections. But I love Michigan, but I don't invest in Michigan. And I have investors here like, why don't you buy something in Michigan? Well, there's negative population growth, and there's really not the place where I want you to put your money. Is Edward Jones going to tell you to invest in your local town? No, they're going to put you in whatever stocks they think are going to make you the most money, and it's not in your hometown probably. Like, try to relate to that. So we've got a system in place. We've been doing this long enough that we stay in markets that even though the market goes rough, I think we're going to be fine. Our properties in Florida, there's still strong demand. We're projecting, $200 to $300 a month rent growth after we've renovated the units, just because there's so many people moving there. That's how we protect our investors. We don't invest in markets that we don't have the data to prove that for next 10 years, this is going to be a great market. This is where we want to put your money.
Right. Yeah. And Florida is one of those places where people are just going in droves. So that's certainly a great leading indicator for a place to buy apartment complexes. That's awesome. Matt, one last question for you. If you could go back through your investing career, or actually two last questions. They're both sides of the same coin. First question is there anything that you feel like you've done really well that other people should emulate?
I would say running a deal and really the investor communication. That's so critical. And people are worried about the deal and they don't worry about their clients. And again, I worked for a corporation. My early years, I was a customer service manager at a large chemical company. So I dealt with Rubbermaid were my customers, these big, huge multi-million. You took care of them. I treat my investors that brings 100,000 as I did my multi-billion-dollar clients. And I think that's something people lose sight of a little bit. They worry about the deal and they're forgetting about their investors. So I think that's my secret sauce, is I really take care of because they make it possible. They're the ones bringing in the down payment. Correct. Absolutely. And if there's anything you could do differently or a mistake you could help our listeners avoid, what would that be? It's really vetting. You're investing in a deal. You should be doing due diligence as well. Take a look at the market. You can Google anything. Right. Take a look at the crime rate. Take a look at the population growth. Don't take everything at face value. You really, particularly when you're new, like now, I invest in all sorts of venture capital stuff. I invest in a vineyard with one of my close friends. I didn't even read anything because I know her so well that I just signed the documents and sent it in. Right. But that's a situation where this is something I personally known for a long time. But do your due diligence, particularly when you're new. And even if you're not, make sure you're just double checking things here. That's the key thing. Absolutely. And it's always amazed me when people are willing to spend $100,000 with me, but don't spend the $500 in a day time to fly out there and actually see it. It's like, come see this with me anytime, any day. It's $500 in a day, your time, and you might find out you hate the project and walk away. And that's okay. Right. That's okay, but at least you did your due diligence. And so I've actually made that a personal rule until this year, when, again, going back to the who I'm investing with is more important than what I'm investing in. Yes. And so this year I kind of broke that rule a few times, and I'm just like,
you just send me the docs. It's fine. We're just go.
But you know their track record, Sam. Right. You do have and your expertise is so high that you look at something real quick and say, "Yep, this is good."
Right.
So there is a difference, and if you're new and you're a veteran investor like you, but
correct. Yeah, there is that differentiator there. But still, it is amazing that what people will or will not do when it comes to spending that amount of money or investing that amount of money in the due diligence part of it. So that's really fantastic. Matt, I've appreciated having you on the show today. Thanks for coming on. It's been great learning about you, your corporate career, transition to limited partner, and then to a general partner, and even how within the general partnership side of the business, you've even transitioned now to focus almost exclusively on the capital raising side of things and working with your investors. So certainly appreciate your insight, your market insights, and how you guys are finding opportunity and value today. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Just go to HansenHoldings.com.
And that's HANSEN Holdings.com. For those of you who are listening, we'll also make sure that's included there in the show notes. Matt, thank you again for coming on today. I certainly appreciate it.
My pleasure, Sam. Thank you.